Good evening, everyone. Hope you all are doing well. So, today we are going to discuss question number 3 of March June 2023, and the question name is Violet Company. This is your client, Violet Company, and the audit firm is Crowley and Company. So this is day 3 of March June 2023. In the previous two lectures, we covered question number 1 in core company and in the question number 2, which was of the Slinder company. Now we will going to solve question number 3, Violet company. Let's start the question. It is 1st July 2005 and you are a manager in the audit department of Crowley and Company. You have recently been assigned to the audit of Violet Company, a company which produces catering supplies such as sandwiches and cakes, which are sold to cafes and restaurants. Its financial year ended on 31st March 2005. Year ended is 31st March 2005 and we are at the audit date which is 1st July 2005. You have also been asked to assist with reviewing the auditor's report for a different audit client, Branson Company, which is a listed entity operating in the pharmaceutical industry with a financial year ended 31st May. Branson Company is part of a multinational group and its parent company is Grantham Company. Your firm audits the Grantham Group and all components of the group. The following exhibits available on the left-hand side of the screen provide information relevant to the question. Part 1 and Part means Exhibit 1 and Exhibit 2. Exhibit 1 is about Violet Company provides details of audit completion matters which have been brought to your attention by the audit supervisor. This kind of questions we have already solved in the December 2022 question number 3, which you can find on ACCA Passpoint playlist under the playlist name is past papers, topic wise past paper. And exhibit number 2 means requirement number 2 is a new kind of questions which we have not solved yet. So make sure you guys are attentive. This is a new exam style questions. I hope you have not solved this type of question previously. In this question, examiner gives you an extract of the report. It could be any matter, key audit matter, material uncertainty para, other matter, or emphasis of matter. Let's read. Branson Company provides details of audit completion matters which have been brought to your attention by the audit supervisor and an extract from the CAM, key audit matter. So in this case, the examiner gives us the CAM, KAM. If you again read this paragraph, you have that Branson Company is a listed company, and we all know in case of listed company, key audit matter is mentioned, is written. So if you have not watched my lectures on block 3, then it's highly recommend you to watch those lectures before moving to the past paper questions, because all the past paper questions lectures are aligned with the block 3 lectures. So make sure you cover all the lectures. At least block 2 and block 3 lectures are very important. If you skip any topic, it's your loss. At least try to watch all the topic, all the block wise lectures. Let's read the requirement first. 25 marks, we all know. Question number 1 cover 50 marks, question number 2 and 3 covers 25 marks. 20 marks are for your writing and 5 marks for the professional skills. Exhibit 1 A, part 1. In the A we have two parts, 1 and 2. Discuss and justify whether the two internal control matters should be included in your communication to those charged with governance and management of Violet Company in respect of deficiencies in internal control for 5 marks. A2, using the file note prepared by the audit supervisor, recommend the matters to be included in your report to those charged with governance of Violet Company and explain the reason for their inclusion. Using Exhibit 2B, critically appraise the key audit matter, extract from the auditor's report on the financial statements of Branson Company for the year ended 31st May 2005. In the part B, the examiner gives an extract of CAM in which we have to identify either the extract is correct or not, means the drafting and the sequence and the linking of the cam is correct or not. Note, you are not required to read draft the extract from the auditor's report. Professional marks will be awarded for the demonstration of skill in analysis and evaluation, professional skepticism and judgment, and commercial acumen. In my all past paper questions, I have explained the professional skills mark in every questions, in every question. So make sure you watch these lectures because professional marks are very, very important. In your entire AAA exam, there are 20 professional marks. So you can discuss with those students who failed at 45, 48, 49. They just failed because they didn't cover the professional skills or professional marks. Let's start the exhibit 1 reading. Violet Company. Okay, as it's mentioned in the question, in the requirement that there are two weakness. So it's already indicate that there are two weakness. Internal control matters. The audit engagement partner has asked you to evaluate two matters which arose during the audit and to consider the communication of these issues to management and those charged with governance of Violet Company in accordance with ISA 265, communicating deficiencies in internal control to those charged with governance and management. If you have not watched this lecture, then go to the ACCA Passpoint channel. Under the blog 3 playlist, you find this lecture. This is very important. There are 4 to 5 past paper questions on this topic. Now, these are the two deficiencies. New payroll system. Prior to September 2004, the company had used two different payroll system. Okay, one for workers who are paid hourly and a separate system for employees on a fixed salary. In September 2004, a new payroll system was introduced which integrates and enhances the two systems. Means previously they were using two systems, and after September 2004 they integrated a system and merged both the previous system. Means all their data transferred into a new integrated system. Audit procedures indicated that when the data was migrated, means transferred to the new system from the old systems, some problems occurred with data corruption and duplication. This is a serious indicator of weak controls. How control weak means they don't have sufficient or expertise in their team, and there might be a manipulation that the data can be manipulated or misappropriated. Further, audit procedures indicated that this didn't result in a material misstatement within the financial statement. It's not necessary that there should be a material misstatement. We as an auditor is responsible to ensure that controls are operating effectively. Marketing director. The marketing director left Violet Company in March 2005 when testing capital expenditure. Remember, there is a capital expenditure, so there is a possibility that revenue expenses might be misclassified. Okay. So, in March, when testing capital expenditure, one of the audit team found that in the last week before she left employment, the marketing director had taken delivery of a new laptop computer, which remains in her possession, means she didn't give back to the Violet company. Still, the laptop is with her. No supporting documentation could be found for this purchase, but the financial controller had approved the capital expenditure. The laptop is included as an asset in the non-current asset register. Again, a control weakness. If she give the laptop to the employee, so it should be expense out. That's why I mentioned in the start that there might be a misclassification of capital expenditure with revenue expenditure. So these were the two weakness. Let's read for the part A2. File note prepared by the audit supervisor. Okay, make sure you have opened this question on your CBE platform, otherwise it just over to your mind. In addition, the engagement partner has asked you to review a file note prepared by the audit supervisor and to consider the matters to be reported in accordance with ISA 260, communication with those charged with governance. 1. Availability of information and manual journals. The information provided by Violet Company's finance director at the start of the final audit did not support a number of material balances in the draft financial statement. As a result, a number of requests for additional information had to be made, which prolonged the duration of the audit. Sometimes there is a possibility that the duration of the audit can be increased. For that, we should have to discuss or obtain the permission of TCWG. Even when additional information had been provided, the audit team found it difficult to agree the draft financial statement to the trial balance. We all know draft is not a final result, is not a final financial statement and general ledger because of several manual journal entries which had been made. Significant additional audit testing was undertaken as a result. Similar problems in confirming manual journals entries had been noted in the previous year and were discussed with the audit committee. It means still there is no work performed on these journal entries as they are still there. Now, property valuation. Violet Company currently adopts an accounting policy of recognizing properties at cost. During the audit of non-current asset, the audit team was informed that the company is considering a change of accounting policy in the next financial year so that properties would be recognized at fair value from 1st August 2005. This is from the IAS 8 changes in accounting policies, estimates, and prior period error. We know from cost to revaluation model is a change in accounting policy, but the application of this policy, there is only one exception in IAS 8, which is cost to fair value revaluation model. When an entity wants to change its model, so the adjustment, the application is applied prospectively. In this case, no retrospective application, no retrospective accounting will be made because it's not possible for the entity to calculate the value once the asset is measured initially, then it's measured on the fair value, then it's not possible for the entity to move back or to find its value on the previous date. So that's why only in this case the application applies prospectively, means on the future date rather than the previous date. Okay, board meetings. In a discussion with the audit manager, Violet Company's finance director said that he would like the audit engagement partner to attend the company's board meetings on a monthly basis so that he is aware of any issues which may impact on the external audit. Again, this is wrong statement. It's not the duty or it's not part of the audit engagement that the audit engagement partner should attend the client's meeting. These are internal meetings only. We need the resolution of those meetings, special resolutions or board minutes. So that's it for part A. Let's, what happened, man? What is this? Okay. So let's go to the answer. This is March June 23, Crowley and Company, or you can say Violet Company. In this question, I use the audit firm name. So, important points. Question number 2 cover 25 marks. 5 marks are professional, whereas 20 marks for the answer. Part A, internal control weakness, communication with TCWG. The lecture comes from the blog 3, which you can find on the blog 3 playlist on ACCA YouTube Passpoint channel. Part B, extract of report for the CAM. Give headings to each paragraph. Professional marks. Professional marks will be awarded for demonstration of skills in analysis and evaluation, professional skepticism and judgment, and commercial acumen in your answer for 5 marks. These are the important points which you should have to read for the professional skills. Let's start the answer. Okay, Crowley Company, part A1, new payroll system. Remember, there were two systems previously, but they integrated a new system, and while transferring the data from the old system to the new system, the file got corrupt or there were some errors. The auditor is responsible for obtaining an understanding of the internal controls to ensure the operating effectiveness of internal control. This is the scope, this is the responsibility of an auditor. However, the auditor is not responsible for expressing an opinion on internal controls. Payroll is a material component of the financial statement, and any error or fraud that occurs in the payroll system can result in a material misstatement. This is a statement of fact. Now, from this line, you just write about case specific, means your wording should be from the extract. Therefore, audit procedures performed by the auditors indicate that there is no material misstatement in financial statement relating to payroll integration software is not justifiable. The audit team should deal this with skeptically, as there might be a possibility of flaws in the previous payroll system, or if this an error continues, then it can result in further issue. Furthermore, this weakness in the payroll system should be communicated to those charged with governance and management so that the management can take further precautions while transferring the data into the new payroll system, as it can result in payroll fraud. And what are those precautions that management should take? Management should hire an expert and as the IT staff who are much familiar or expertise in this transferring of data, or they should have a proper backup. Due to the data duplication, ghost employees might be attached within the system, and due to corruption of the data, any unethical things happen to the employees which can result in reputational loss of entity, means Violet company. Okay, part 2, or marketing director. The marketing director had taken delivery of a laptop which remains in her possession after she left the Violet company in March 2005. This should be dealt skeptically, as she just left the Violet company at year end, which is skeptical why she left just at the year end. Furthermore, this result in a misappropriation of assets, as the laptop is still in her possession, which she got just a week before her resignation from the Violet company. This further increases the doubt, as she just got the laptop and she resigned. As the capital expenditure was approved by the financial controller without any supporting document, cast doubt on the integrity of the financial controller. It is the responsibility of the financial controller to take proper authorization, but in this case, there were no supporting evidence. As the financial controller was aware of the fact, due to this, there is a management override of control by marketing director and financial director. It means finance director were aware of this misappropriation. That's why there would be no supporting document. So it means this is an override of control, as they are overriding their own control. The audit team should communicate this matter to those charged with governance. Can anyone tell me why those charged with governance, not management? Because the higher management is or may involve in this fraud. That's why we should directly communicate to TCWG so that they are aware of this misappropriation of the laptop, which the marketing director didn't hand over to the Violet company while she left the Violet company. Now, part A2. Oh, what happened to this slide? Oh my God. I think it just ended. Okay, don't worry, I will up. Availability of information matters to be included, means what matters to communicate to TCWG. Okay, the information provided by Violet Company's finance director at the start of the final audit did not support a number of material balances in the draft financial statement. First thing, this shows the inconsistency between the material balances and the draft financial statement. The audit team should discuss this with the management to resolve the inconsistency. Now, I think there is some error, but don't worry, I will make it in one page as it extracted into multiple pages. Okay. Furthermore, the laptop is included as an asset in the non-current asset register, shows that the management tries to manipulate the financial figures by showing the laptop as an asset so that the marketing director will remain safe from this misappropriation. Therefore, this control weakness should be communicated to TCWG so that they can take strict action regarding the management and the marketing director. Now, however, the auditor shall communicate this to those charged with governance so that there might not be any inconsistency with anyone. Furthermore, if the inconsistency remains there, then the audit team will include this matter in the report in the other information paragraph. Look how important block 3 lectures are. In every paragraph, in every statement, there is something from the block 3. In the other information paragraph means any information other than the financial statement, such as chairman's review report, director's report, company accounts. And we know that as an auditor, we can't express an opinion on the other information. As the auditor shall not express an opinion on the other information, the number of requests for additional information had to be made, which prolonged the duration of the audit, is not a justifiable statement. The scope and timing of the audit have been set at the start of the engagement. However, there is an inherent limitation due to the scope and time, but the duration of the engagement can be exceeded after obtaining permission from TCWG due to further procedures on additional information. The audit team found it difficult to agree on the draft financial statement for the trial balance and general ledger because several manual journal entries had been punched by the management. This shows that the management manipulates the financial figures or window dress the financial figures by passing the manual entries for earning management. This act is not justifiable and should be communicated to TCWG so that transparency and accuracy should be maintained in financial statement as it was discussed with the audit committee in previous years. This shows a lack of integrity towards the audit committee so that the financial statement presents a true and fair view. We all know that as an auditor, we are responsible to check whether financial statement give true and fair view. We do not go for the best view, we always go for the true and fair view as we have to comply with the faithful representation. Why audit committee is guilty or integrity of the audit committee is negligent in this case. If you go to the questions and read the exhibit, then you will get the idea that audit committee was involved. Now about the property valuation. Remember IAS 8 changes in accounting policy matters to be included as per IAS 8. Changes in accounting policies, estimates, and prior period errors. Changes in accounting policies should be adjusted retrospective. This is the accounting treatment. However, in this case, recognizing properties at cost and management is planning to move to the fair value after the end, it should be adjusted prospectively as it is not possible for the management to do the adjustment retrospectively in the next year. This exception is only for change to from cost to revaluation model. Therefore, this should be communicated to TCWG so that the next year the accounting treatment of this change should be applied prospectively instead of retrospectively. However, failure to adjust this change will result in manipulation of the financial statement by the management, or it could result in a material misstatement is the effect if the effect is material. So, last point for the part A is board meetings. Violet Company's finance director said that he would like the audit engagement partner to attend the company's board meetings. Look, I copy the statement of fact from the question. You guys should follow this, it will save your time. Company's board meetings monthly so that he is aware of any issues that may impact the external audit. This shows the lack of competence and integrity of the finance director as external audit is an independent audit engagement. Further, if engagement partner attends such a meeting, then it will cast doubt on the integrity of the engagement partner also. Also, it results in an advocacy threat as the engagement partner is promoting the interest of Violet company by attending the board meeting so that they might be aware of the issues. Furthermore, there is a management threat as it is the role of the management. And if the engagement partner attends such a meeting, it is considered as the engagement partner stepping means doing the management responsibility, which can doubt on independence of the engagement partner. Therefore, this discussion of the audit manager with the finance director should be communicated to TCWG as it is very important. So TCWG might be aware of such discussion. However, after communicating this to TCWG, the professional liability of Crawley and company would not result in any negligence, means we have done our duty. Now there would not be any negligence on the professional liability of an audit firm. So that's it for part A. If you have any questions or any confusion, or if you are not clear with this answer or with the question, you guys are welcome to comment or text me. I will try my best to resolve all your queries. As the exam days are approaching, make sure you watch these lectures and your concept should be crystal clear, because from now onwards we will just solve past paper questions. No more topic wise lectures, even though I will upload 1 to 2 videos on the sustainability and data analytics, as it was a technical article which I think is less important for your attempt. But we all know we should have to watch all the lectures, as there is no selective study, no appreciation for the selective study. So that's why make sure you guys complete all the lectures and try to watch the complete past paper videos. Let's move to the requirement B, Branson company. Remember, critically appraise of key audit matter. Let's read it. Oh, okay, guys. So the audit work for Branson Company is complete, and the auditor's report is due to be published next week. From reviewing the audit working papers, you are aware that Branson Company is facing some cash flow problems. Highlight this word. A letter of support has been obtained from its parent company, Grantham Company. The audit working papers conclude that there is a significant doubt over the company's going concern. If you read these lines till now, it's more about the material uncertainty relating to going concern paragraph, not about the CAM. And that the financial statement of Grantham Company have been reviewed to confirm its financial status and ability to support Branson Company. The notes to the financial statements describe the cash flow problem faced by Branson Company and the support offered by Grantham Company. The audit working papers conclude that the disclosures made in the financial statements are complete and appropriate. A draft of the key audit matters can section of the auditor's report in respect of Branson Company is shown below. Before reading the CAM extract, let me give you an overview. MURTGC is mentioned or is written when there are events or circumstances which may cast doubt on the entity's ability to continue as going concern. Mean there are certain events or conditions due to which entity may not continue to operate in the next 12 months. So based on that, as an auditor, we write MURTGC paragraph in our audit report. If the material uncertainty is disclosed by the management. If management does not disclose, of course, it will be a modified opinion. Okay. Now, key audit matter. CAM is included only in case of listed company. Only in case of listed company. There is an exception. CAM can also be included in case of unlisted company, but if it is a public PIC, public interest company, or it is required by law. Otherwise, CAM is only in case of listed entity. However, if there is a disclaimer of opinion, then CAM will not be included in case of listed entity as well. Now, what is CAM? Those matters which are most significant should be communicated to the TCWG, and the matters are from the current year, not from the prior year or for the future year. It should be from the current year, communicated to TCWG and significant matters. Okay. How to draft a CAM? Even though in this question the examiner did not ask for the drafting, but this is for your understanding. First, we have to write a CAM. What is CAM? I just give a definition of CAM, that it's a significant matter, communicate to TCWG or from the current year. Once you write this heading, then you have to identify the CAM in the extract. You will write that the revenue of 500 million is significant. So this is a CAM. Then you will have to refer, let's say this, refer note X of the financial statement as the CAM is mentioned there. If you want more clarification on all of these matters, CAM, MUR, GC, EOMP, OMP, then please watch the last lecture of log 3. I will attach the link of SBR lectures as well as blog 3 lectures. It could be here and there. So make sure you guys be attentive while watching this lecture. Okay, now key audit matter. The extract name is CAM key audit matter, but the paragraph name is going concern. We draw your attention to the going concern problems facing Branson Company. The company is loss making for the third consecutive year, and the going concern problems are fully described in the operating and financial review which accompanies these financial statements. We are confident that the parent company, Grantham Company, is able to fully support Benson Company. Okay, the first mistake is this is not a CAM as the wording is GC. Also, the second mistake is this is not a correct GC paragraph. The heading should be material uncertainty relating to going concern paragraph. The heading of GC is also not correct. Also, the wording is not standardized, is not an ISA wording. You have to watch that lecture in which I have explained all the paragraph wordings, headings, each and everything which your examiner didn't ask previously. But I try my best to cover all your concept, not for this triple exam, but for your professional and future life as well. Now, contract win. What is this? On a more positive note, we are pleased to announce that Branson Company has recently been successful in tendering for a significant new contract to supply Talbot Company with pharmaceutical goods. The tendering process was very competitive, and the management team of Branson Company was pleased to win the contract from Rose Company, a key competitor. We believe that this will return Benson Company to profitability next year and eliminates the going concern problems to a large extent. Again, this is not a CAM, and even it is not a wording of MURTGC. Now let's read the answer. Okay. So, critically appraise the key audit matter extracted from the auditor's report on the financial statement of Branson Company for the year ended 31st March 2005. Appraisal of CAN, key audit matter. The matter related to going concern should be mentioned in the MURTGC paragraph, not in the key audit matter paragraph. Also, the heading of the material uncertainty paragraph should be material uncertainty related to going concern instead of going concern. However, a reference shall be given in the key audit matter paragraph by stating that in addition to the matter described in material uncertainty related to going concern section, the auditor determined the matters described below to be key audit matters to communicate in the report. You will only understand these lines if you watch block 3 lectures. The wording of the GC paragraph is not appropriate as it should be started with. We draw attention to note in the financial statement, which in this extract is incorrect. Also, the year ended for which the going concern problem arises is not mentioned in the paragraph. The key audit matter should be mentioned, followed by the basis of opinion paragraph. You have to watch that lecture for the report structure. Therefore, in this case, it should be started before material uncertain related to going concern paragraph, not after it. The contract when section mentioned in the CAM paragraph is not appropriate as it should be in this format. What is the CAM? Format is for the key audit matter. So what is the key audit matter? Auditor shall briefly describe the matter along with reference to related disclosure in notes to the financial statement. Why the matter was considered most significant, how the matter was described in audit. So that's it for day 3 of March June 23. Question number 3, Violet Company or Crawley and Company. Again, I am repeating, if you have any questions or any queries, feel free to ask. Days are very near. Please be attentive. Be attentive. Make sure you use these days effectively. Make it productive. Otherwise, you will just regret. Trust me, you will just regret. Make sure you cover all the things. Do not try to do selective study because it will not help you. So take care and best wishes. Do preparation well.